Hello and welcome to Count on our Simplified Advice, a 360 podcast, all things employee benefits. We're here to make sure that we can simplify your employee benefits to you so that you can take as much advantage as you can of them. My name is Nicolette Mashile, also known as the Financial Bunny, and I am joined by Butši Tladi, who is Executive Consulting at Alex Forbes. Butši, welcome back to our podcast.
Thank you so much. It's a pleasure to be back.
See, we loved you so much in all of your explanation and your breakdowns that we've brought you back to come and talk about group risk. Now, I think a lot of us will have a conversation at some point, whether it is with your hiring manager or the HR department, and they'll talk about some of your benefits that include group risk. But when we talk about group risk, what exactly are we covering?
There are a number of components to group risk.
Okay.
But some of the components that are popularly used or that are mainly appreciated by employees include your cover for death, your cover for disability, in case you get a critical illness, or even funeral. Those are generally some of the most commonly understood and used benefits.
They sound very individualistic, man. You know, when you're talking about your own life, it's your life. You need to make sure that you are you have a contingency plan for if something happens to you, if death happens to you, or if you become disabled, or if you have a critical illness, or you lose your job. Why is an employer even concerned about giving out or offering such a benefit?
Employers generally offer group benefits for two main reasons.
Okay.
The first reason is to try and boost productivity because employees understand that they're being well taken care of. The second benefit is one that is of societal benefit in many ways. It is to say that often when something happens such that a breadwinner is not able to earn an income, families generally look up to the employer to provide a solution. And that is when these benefits come into play.
And let's talk a little bit about that risk that exists within a death. What does it look like? And because you spoke about when a breadwinner passes away in a home, I think many of us just think, oh, shame. Shoni, like Kaya, but we don't think about the implications, especially financially. What does it look like if you can just paint us a picture?
Yeah, definitely. So generally, many of us have got obligations that are part and parcel of what we do. And our obligations are normally about paying for debt. It is about looking after our families and children. And when something happens that enables one to be able to earn such an income, there needs to be a solution. And it is quite, it is something that has to be part and parcel of one's financial planning to provide some form of protection, a safety net when things go wrong.
So I'm from Bushbuckridge, right? And often you hear people having, especially if you work in Johannesburg and one of the big CBDs in the country, right? And people will say, yeah, she works in Jozi. It's a big thing to work in Gauteng when you are from, the other parts of South Africa. So if something does happen to you and you pass away, often our family members will travel to Gauteng to your employer and want to hold the employer accountable for some sort of financial support. Is that realistic?
I guess it is a part and parcel of firstly understanding what our obligations are towards society.
Okay.
I think many responsible employers would want to be able to assist. So in as much as it's an individual decisions about about the type of planning they make in their lives, I think many of us expect that an employer of choice will be one that truly cares for their employees. And part of that caring is making sure that not just that employee is looked after, but as indicated, that there is a safety net of sort for not just the employee, but their beneficiaries as well as their dependents. So it is in some ways an expectation that good employers, the ones that want to attract and retain talent, will be able to offer some of these benefits.
Now, it's the mindset of employees, specifically younger ones, right? To think, I'm still a bit young. Why must I contribute to a group life? What are the chances? I mean, I work in the office. What are the chances of disability? I am a professional with many degrees. What are the chances of losing my income? Why particularly young people should consider, really taking serious note of a benefit like group risk?
if we are struggling to see ourselves as old, what is very clear is that even young people are not bulletproof.
Yeah.
Things go wrong.
Yeah.
Accidents happen.
Yeah.
And it is for times such as that benefits such as this truly become a reality. In fact, one says that in that life stages that one is in, one should make decisions that are commensurate with where they are in their journey of life. So when you're young, perhaps you don't take as much of a medical scheme cover because you probably are young and healthy. However, what one needs to be looking at is, should something happen, you have adequate cover, risk cover to protect you from that. You don't yet have assets built up, but there's a certain level of protection that you need.
Now, if you were to take up, and I'm going to, what's the word? I'm going to pick on group life, because obviously the alternative, if you are not taking group life within a group setting, would be you taking out your own individual life insurance, right? Now, when you are doing that, often you are asked medical questions, all sorts of questions. They want to know your liver type. I'm just joking, but often they ask you all of those questions. That also happen within a group life setting.
The beauty of participating in a group arrangement is that underwriting, as it's the technical word, is that it's done at a group level, which means that you are not assessed based on your individual health status. What one looks at, it is the group. It is the average age of the group. It is the sector that you're employed. So there are those factors. So the risk is aggregated, and there generally is a certain minimal level of risk that all members of such a scheme are entitled to, regardless of their health status. And in the same way, the costs thereto, what you pay, is aggregated. So you don't pay based on your individual health status, which means that even some of us that are not as healthy as others get an option. They're able to get a benefit at a reasonable cost.
I was about to say that. I was about to say, can you imagine if you are somebody that has a chronic condition, or maybe you've waited a bit long to get any type of life insurance, and I'm picking on that product again of life insurance, and then all of a sudden you go from an individual perspective to try and get this cover, and all of those loadings now start to count, and you will see them reflected obviously in your premium. But when you come into this group setting, as you say, the risk is aggregated. We compensate for others, and I think it makes for a good cost saving, I would say.
It does, and even more importantly, often such contributions are deducted via payroll, and what that does, it minimizes the risk of default. Before money hits your bank account, we've already deducted that, which is necessary to give you the protection that you need.
It's necessary to protect you from yourself, because you might not go and contribute.
That is so true.
When we had the conversation about retirement, one of the things that you said, we looked at the options that one has if they, for instance, changing jobs, right? They can transfer their retirement fund, they can preserve it, or they could potentially, what was the other one that you had said? They could stay in and become a paid up member. In the instance of group risk, what happens to those policies when you change jobs?
So when you change jobs, the reality is that your new employer will probably have a different arrangement. So you will get into a different arrangement, which is also treated pretty much in the similar way, in the sense that you will have group underwriting, you will pay through the employer. So some of the mechanisms will be the same.
Yes.
However, no two schemes are exactly the same.
Yes.
So there will be differences. One does not necessarily get apples for apples, but you get similar levels of cover.
Yes.
Also, some employers offer a level of flexibility, depending on so allowing the individual employee the right to assess their own needs and determine how much they need. So again, that could be another factor that will differ as you move from one employer to another.
And what happens, sometimes if you work in certain industries, there's that 3 months that say you must stay at home because you are going from one competitor to another competitor. In that 3 months, who would be covering you?
Right. So chances are you remain employed by your previous employer. So whoever you're employed with will provide the benefits.
That's interesting, right? I've never really thought about it, because I'm always thinking, how does one actually maneuver around all of that?
So you remain employed by your previous employer. You're just serving a 3 months notice period, and sometimes you could serve that at home.
Could you have group life or be a member of a group a group benefit scheme which has group life and have your own life insurance outside?
Definitely. In fact, most people do that because sometimes the benefits are not sufficient. Again, depending on the stage of your life that you're in.
Yes.
You could find that your employer does not offer, because often you mentioned group life. In terms of the death benefit, they could offer maybe 2 times your annual salary, and that may not be enough because perhaps you have a larger family or you've got more dependents, whatever your circumstances are. And then you have an option as an individual to look outside of your employer arrangement. But often in an employer arrangement, obviously, the benefits generally can be purchased at a much lower rate.
And you spoke about the death benefits. What is that?
Oh, it is a benefit that becomes payable in the case that you die.
Okay. Oh, okay. So that's part of what takes care of my extended family.
Among others.
Yes, in the cases that I do pass away. Okay, well, that's quite an interesting one, because I think a lot of us never really think past that, when we're doing our estate planning, which very little people in this country do. We never really think about those types of things. I wanna get into a conversation that I think is quite familiar in South Africa. If you speak to anybody, a lot of people, especially young people, are paying a funeral cover for themselves and extended family members. Are you allowed to add extended family members to a employer-sponsored group?
Again, it depends. It depends on the specific rules of such a scheme. Some allow for that and some do not allow for that. So it really will depend on what that arrangement is that either the employer or the trustees of the fund have decided on.
I think we've alluded to the fact that there's quite a big saving if you have an employer that offers you group benefits versus if you are going to be paying out of pocket. Are we correct in saying that's a fact?
It is a fact.
Yes.
Like as indicated earlier on, remember you're not assessed as an individual. You're assessed as part of a collective, as part of a scheme. And there within that, generally speaking, there's a greater number of members. As I said, it depends on your sector, it depends on your average age, it depends even on salary. So when one takes into account all of those factors, generally one tends to access better benefits through a group or better rates through a group arrangement.
Now, Butchi, one last question. The counter to that, and I think you spoke about it also earlier on, where you went into great detail about the risk of being aggregated against the group. Now, I could step in as a young person and say, yeah, granted, the risk is aggregated, but it still doesn't make sense for me because in actual fact, I'm probably now compensating for other people within the workplace. Yes. So is there a downside to it, to that aggregation?
I wouldn't say there is a downside, but obviously there's an element of cross-subsidy. And depending on where one sits, it is often easy. Sometimes you may have a myopic view of saying, as an individual, I'm better. But ultimately, you're also going to be cross-subsidized at some point.
Yes.
If you stay in that fund for longer. So younger people, it reminds me of a medical scheme. Younger people come in there. Generally, we don't expect you to claim. We expect you to be there and not claim. However, other people could be older and more sickly and will claim more from that benefit. But in the fullness of time, if one considers the fact that you will remain in a benefit structure your entire working life, when one looks at it that way, it does come out in the wash.
And before I let you go, a pandemic like COVID-19, what did it show you guys in terms of group risk?
I think it showed us the true benefit of benefits such as that. Because in as much as there was a concentration towards older people, there were young people that we saw that had that. So subsequent to COVID, we experienced some true devastations within that. Many funds, in terms of their claims experience, they were up to 3 times what we ordinarily would see.
Wow.
So the rates that are, the rates in terms of the reviews that are coming out are significantly high, but that will normalize with time. Yes. But I think when people needed that benefit, it was there to cushion and truly provide the type of cover that we needed and had envisaged.
Yeah. And I'm sure outside even just of life, a risk that is associated to life, I'm sure there was quite a number of claims around income protection.
Correct. Because many people also experience what is called the long COVID.
Yes.
And not just in terms of of physical capability or ability to do one's work, but also mental conditions as well.
Yes.
So it's been a truly difficult time in the world, not just only here. And one sees that coming through in terms of the claims that are coming through to the insurers.
So your mental health wellness would then fall under group risk. You would claim from that benefit.
To the extent that you are incapacitated or disabled, regardless of the actual illness, that would be part of what is covered or considered as part of the benefits.
Sure, absolutely fantastic once again. But really do appreciate your time, Butši. I think you've got a way of just really explaining, concepts that are foreign to some of us, foreign to many of us, because one of the things that I will always hold on to, I think you said it in the conversation about retirement, is you don't know what you don't know.
True.
And I have this saying where I say, sometimes you may even have a policy, you may have these covers, but if you don't know them, they in essence don't actually exist, because you can't claim from them if you don't know they actually exist. And I think you just have a knack for being able to break these types of concepts down for us. So we really appreciate your time once again.
Thank you so much. And we look forward to further conversation where we can truly simplify these things.
Yes, definitely. And that was Butši Tladi. She's executive consulting at Alex Forbes, really assisting us in making sure that we simplify employee benefits. This has been Count on our Simplified Advice podcast. Remember, if you have questions, and I know you have many questions, please drop them in the comment section, and we're going to make sure that somebody at Alex Forbes does respond to you as quickly as possible. Thank you very much for tuning in, and I'll see you guys on the next one.